Hi, everybody, and welcome to another episode of Nurturing Success. This is our interview process with trusted advisors in the financial services type of space. Today, we're joined by Jeremy Baker of Arroyo Insurance. He'll tell a little bit more about his company, but welcome, Jeremy. Thank you very
Arroyo
much for being here.
Financial.
What's that?
Arroyo Financial. Arroyo Insurance is like the other. They're like just PNC
You're right. Sorry,
Insurance.
Arroyo Financial, right? So it's just like there's too many Arroyo names. Like, why are there so many names?
There are. So Arroyo. If you call Arroyo Plumbing, you're definitely in the wrong
right.
place.
So I mean that is it's actually anyone who lives in the Pasadena, San Gabriel Valley, we understand where the Arroyo is. It's a great thing, and so people love to use it for their name. So you're right, Arroyo Financial. Thank you for clarifying. But we'd like to start off with a really, really important question, Jeremy, and that is, what are you grateful for today? What are you grateful for today?
I'm grateful personally. Obviously, the obvious ones aside, like family, etc., and good health. I'm very grateful for being in this industry for as long as I have. I've been in it for about 22 years. I'm very just amazed sometimes that I was able to stay in it. In those first couple, I think my first year I made like $20,000 or something. Which is, it is what it is.
I made for several years in the mortgage business, so that's great. Congratulations.
Exactly. I'm glad that I was able to stay in it, and I think that at the end of the day, it's just it's a hard industry to be in. And one of the guys that I worked with once, he said, "This is the hardest job to make $50,000 a year in. It's the easiest job to make $150,000 a year in." And it's like that sentiment. It's true. So
yeah, no, it's great, and I do think consumers tend to look at the insurance industry in an odd way, like, okay, I kind of think I need it, but who do I trust? How do I find people I trust? How do I understand these products? And it's really challenging, right? And so
right.
and there is a very, I'm not sure it's the right way of saying it, a heavy sales dynamic that the industry is known for, good or bad. I mean, again, people need the product, and anyway, so there you go.
I spoke with a prospect. It was about a month ago. They ended up signing up with me, but they signed up for a whole life policy. And take a guess as to what time of the day they actually ended up signing the paperwork after something like a 4-hour interview. Or
wow. I'm going to say it was in the early evening, just after dinner time.
They said it was just after midnight.
Oh my goodness. Wow. Okay.
So, I mean, I don't have the fortitude. I mean, it could be like a huge commission, and I'd be like, "Oh, I'm so tired of this. Like, I'm going to go home." Right. But there in the case studies that Limra did, I think it's like people say yes after the 7th ask.
Yes. That's the sales cycle. It's in your business can be very, very long. It is in certain elements of the mortgage business. It can be very long as well, especially when you're dealing with complicated products like reverse mortgages, and it can be years before people make a decision, even though it's the best thing and a lifesaver. And the same thing for insurance, right? And it's a lifesaver for people, and so necessary, and yet they have a hard time making a decision. So what do you think? Sort of looking at the landscape of what's happening in the world today, as we are recording this, we're in an election year. There's a lot of turmoil and unknown and probably some angst out there. But what should consumers be thinking about when it comes to your world right now? What should be on their minds that they're probably missing?
Yeah. I'm an art history major. So I spent many years studying stuff, and all I will say is that everything that you're seeing has already happened.
Yeah.
Everything that we're going through it's nothing new. I mean, we could start rattling off things, but I mean, the communists and fascists were literally fighting each other in Central Park in like 1915. The American Nazi Party was alive and well in Glendale, California in the 30s. Everyone knows the protests of the Vietnam War. all of this stuff has kind of happened. I think that if you want to try and remember that, and keep it kind of the back of your mind, that things are going to come and go. There's going to be transitions. There's going to be improvements. There's going to be setbacks. The market's going to do what the market's going to do. What I want people to realize is that, like, unless you've already got like a trust fund or a huge inheritance, or something that's fallen at your feet, and you're very fortunate to have that. Um, Investing is for the long,
Mhm.
steady, boring, timeline. I don't know who it is. They just rolled this ad out, and it's basically their gist is be boring. We all saw I just saw that movie Dumb Money, which is all
Yep.
about the GameStop, stock buying. You've got all these kids on Robinhood, and they how many people lost money, how many people made money, right? There are always going to be winners and losers. But I mean, I like being, you want to be kind of like, there's a great movie called Blended with Drew Barrymore and Adam Sandler. And my kids and us, we've watched it probably like 20 times. And there's a great line with Adam Sandler and Drew Barrymore where they're saying, look, you have to be so boring. You have to be there consistently. It's like, it's nonstop. That's like your old, it's the same thing with this. Like, you want to put that $100 a month away, $100 a week away, whatever your kind of like pain threshold is, right? You want to be consistent with it, because now over the long term, you're going to actually see returns.
Yeah.
I guess that's the easiest way to put it.
Yeah, it's a good reminder that the ups and downs of the daily news or weekly or even monthly news really have nothing to do with good financial advice and good financial foundational type of
Right,
activities. Right at the end of the day, you,
right.
you need to do all those kinds of things. I was lucky about GameStop because um, I did jump into it on just a very small way. I was kind of playing around with it, and it
Mm-hmm.
started to make money. And then, of course, lost money very quickly. And so I actually dollar cost averaged my way back into it. I started as it dumped. I'm like, okay, I got to go back in. I'm buying low, right? And so I actually
Right.
dollar cost averaged my way back into actually making money, which was a fun little lesson to learn on a small scale, right? So,
And arguably too, I mean, people will come to me and be like, I've got $10,000, I want to do this with it. I'm like, yeah, or you could go to Vegas and actually like have a good time.
sure, yeah,
And they're
exactly.
like, like, I mean, if you're dropping like whatever, like $500 like spins of the roulette wheel, something's gonna hit,
It's
and
gonna be a
hey,
good
they're gonna
time.
start giving you free buffets. Like, go get some lobster, like, get something out of it.
Got a room
I mean,
upgrade. That's funny.
yeah, I mean, I stupidly did. I bought individual stocks at different points in my life, and I don't think it ended up well ever, but I rolled them all over into
Sure.
mutual funds. So
So the audience of this particular show is other successful advisors that want to sort of understand what their peers are doing and what's going on. So what's working in your business? What's working in your practice right now for you that you're focused on?
yeah, I noticed this during the pandemic too. Unless you're all in on one thing, and you do it really well, and you have like a great pipeline to something like endowments, or 401ks or something like that. What I find has worked really well for me is a real broad diversification of the products that I sell. It's almost like weird. It's the same stuff that we say to our clients, right? Like, you want to be diversified.
Hmm.
I mean, I do, from insurance products, I've done everything from disability insurance to like health insurance for individuals that I really don't want to do anymore. But at the end of the day, that health insurance it's still money.
Yeah.
It's not that much anymore. But those people also are going to be like, oh, like, hey, Jeremy, I need to buy some life insurance. Or my cousin, he just had a baby and he needs life insurance. But I think that kind of like constant willingness to like do stuff that you may not want to do.
Yeah.
The other thing is, I mean, your phone doesn't ring off the hook saying like, John, I need a mortgage. I need a mortgage now, John. Like, right?
Doesn't happen that
So
way. I don't know why, but it doesn't happen.
it doesn't. And so, but the other thing with some of this stuff is like, hey, you may not like selling, whatever, like, auto insurance to a certain amount of people based on driving records or whatnot. But let's
Sure.
say that, hey, your phone's ringing,
Yeah.
right? Like that's a zero cost prospect, right?
Yeah.
So if people are calling you, that's a good thing. So
Now, so speaking about that, I mean, do you have within your practice, within your business, do you actively cross sell to other sort of products? Like they'll maybe the entry point is one sort of thing, and then over the years you're thinking they might need anyway. So tell me about your process and how you think through it, and is it a defined way of doing it?
yeah, I mean, definitely, I definitely do cross sell. I cross sell in multiple ways. Like, so I sell Medicare supplement and Medicare Advantage plans. Once again, it's kind of one of those things that I don't want to do all the
Sure.
time, but it is like the easiest single. It is just straight to first base, and you are getting a client. But hey, guess what? That age range, they're then also going to have a question about long-term care insurance. They're going to have a question about. They're going to have other friends that are turning 65. They're going to have maybe some income questions,
Mhm.
and we all want to be, at least from the financial advisors, right? Every financial advisor wants to be like, my minimum is whatever,
Yeah.
right? I don't have minimums, but I always find it interesting because you're basically telling your clients and people kind of like what type of advisor you are. And I met an advisor a little while ago, and he was basically, we deal with high net worth individuals. And I said, well, what does that mean anymore? He was like, well, $3 million and above. And I was like, I'm sorry, but $3 million isn't high net worth anymore. Like, if maybe your minimum is 25 million, okay, now we can start talking, right? But like, we all kind of need to start changing those words. But yeah, I kind of went on a diatribe there. But
No, but I think it's interesting because I do think that as professionals, we need to understand how maybe we're viewed by other professionals and by which ultimately is an extension of consumers, and how that perception comes across. And you're right. I mean, I mean, we hear this term mass affluent, and what does mass affluent mean anymore? The reality is that if you live in Southern California, you're mass affluent. Almost you can't avoid being mass affluent, right? And that doesn't mean you can pay your bills and you're not going to Europe every year. I mean, who knows what you're doing?
right,
Right?
right,
It's fascinating to see that kind of stuff. But kind of on
yeah,
that
and I
note,
think
sorry. Yeah.
no, I was just I think what I think a lot of financial advisors also need to do is that, like, hey, if you don't want to, if someone's like offering you like a $10,000 401k rollover and you don't want to do it, don't do it. That's why Vanguard is great. That's
Yeah.
why all these online places that they can just do mutual funds is great. It's economies of scale, and for the oversight and compliance and risk to bring on a $10,000 IRA may not be worth it for most people.
Yeah.
I think it's barely worth it for me. Like, they have to be kind of like good people that fit my kind of mindset and are really just looking for a one-on-one conversation that's not being recorded on an 800 line,
Yeah.
right?
Makes sense. Well, so I guess on that note, because your focus is a little different than most other advisors, as it were, and because you have an insurance kind of focus, but are also able to do some planning and management and so forth. Do you end up partnering with other financial advisors for stuff that doesn't fit their book, for example? And is that something you pursue?
Yeah, a little bit. Your broker dealers won't let you partner with other broker dealers.
Okay.
So
Yep.
honestly, I'm just like real straightforward about it. I'm like, look, you're looking for this type of advisor. Here are a couple names. This person's an RIA. This person, basically can give you mutual funds at, like, no sales charge. It really just depends on that person, but I don't partner. That's the way. That's the only way I partner with people is actually by giving other advisors referrals.
Yeah.
And usually that
Well,
Usually it's a one-way street, but on the rare occasion where you are going to get something back, it does work out. So
yeah, and that's sort of more what I meant. Like, if there's a situation where somebody says this doesn't fit my business, but maybe you should talk to Jeremy. Is sort of more, and vice versa, right? There's stuff that doesn't fit into your business that you're able to refer out to other professionals, and so forth. Uh, so, tell me about your network. How do you find partners to work with? How do you go out and do you network? Is there a
yeah,
specific CPAs or a state? Who do you work with?
I work almost all on referral. At this point, I don't pay for any SEO or I don't pay for any leads. I like that in-person networking.
Yeah,
I've seen a real ROI on that. I mean, even in like what a lot of people would consider pedantic, which would be going to like your chamber of commerce meeting.
yeah,
I've seen a lot of people in those rooms that they're looking for people in my industry. I think the kiss of death is you show up to one and you don't get any calls, and so you don't go to a second one. Yeah, it's all of this in-person networking. You got to go like for a year. You got to get
yeah.
people to know who you are and see that you're consistently around. I've seen a real good increase in my business since starting in-person networking groups. I mean, I started them probably like 10, 11 years ago.
Your own
Uh,
group, or
what's that?
your own group, or going to groups?
Going to
Okay,
groups,
got it.
yeah. So whether it's, I mean, they're all, it's like
Yep.
Toastmasters, Latip, BNI, Team, Provisors, all of these types of groups, right? I think it's just a commitment to going, which yeah, it gets hard. It gets like I've got to go to this meeting every week or every month or whatever. But one of the greatest things about being self-employed is you're the one
Yeah,
doing your own calendar,
yeah, yeah.
right? I mean, if you put in a meeting for Wednesday at 1 o'clock, my God, like it's got to be something amazing for me to cancel that. Treat it like you're a doctor, right? Like
Exactly.
you can't change, right? Like just be like, look, noon, this is what I'm doing. I have 11 o'clock available for a call, Mr. Jones. So
Well,
yeah, that's maybe.
yeah, no, I think it's a great takeaway. I mean, yeah, networking is a contact sport, right? You need to be in the ring talking to people that you can do business with, and you're not going to get business from everybody, right? And we all know that. I don't think there's any secrets to it, but you do need to show up and you add value where you can add value, and kind of and be consistent. I think you said it. You got to be consistent and show up, because out of sight, out of mind. And I know post COVID, it's been more challenging for even for me. I mean, I like being on Zoom, and I like sort of having you can kind of hide behind things, and that's okay. But I'm going back out and doing things, and that's all right.
I've said it. I was saying it to somebody yesterday. Like, hey, like the pandemic made us all just a little bit more lazy, and Zoom and those types of places have facilitated that.
Yeah,
And like, I mean, there are events that I'm like 5 years ago, I just would have been like, oh, that event's at like 5 o'clock. I'm going to it. Like, I'll just work a full day, leave the office, go have like a glass of wine or a cocktail, network with people. Now it's like, well, it's 3 o'clock. I'm home. Like, why would I go? Why would I go back out? It's like we've all become a little soft, I think. But
well, I think you're right, but I'm and you mentioned, and I want to go back to it because I think it's really important, the idea of how important your calendar is, and I'm not. Do you use time blocking, or how do you, or sort of you say, okay, I'm going to do these sorts of activities during a certain time, or how do you view your calendar management?
yeah, because of the way that my business is, it's like I'm not, like structuring people's investments or anything.
Yeah,
I'm not doing any work really on the back end. I have my calendar open for calls and Zooms. I think it's open from 10 to 4.
okay,
And I don't even have a lunch in there. So if I'm going to book a lunch, I actually have to go in there and book it.
yeah,
So that's one way that I'm kind of saying like, oh, my schedule is open for clients and prospects, but I'm constantly going in there and putting in events and stuff like that. Um, but yeah, that's my only blocking.
yeah.
I make that available on my Calendly, and I even have next day appointments, and I don't care if it looks like I have nothing going on. because like I said, it's all about getting people in the door, right?
Yeah.
Like, I'm not going to make it sound like I do something very sexy. At the end of the day, it's still
Well,
mostly just insurance.
yeah.
So,
Well,
yeah,
and I think you I think you made that comment at a meeting we were at recently together where you stood up and said, "I sell insurance. I know how exciting it is to all of you, but that's what I do," or something like to that effect. And
yeah,
it's really disarming, right? I mean, you have a great presence around you about, look, this is what I do. I love doing it. I've been doing it for what 22 years, whatever it's been, and
yeah.
you're obviously good at it. So,
And my joke is always, "Hey, it's better than working." I mean,
there,
and that joke actually came from I was a trainer for like 4 years for a captive agency company,
okay,
and one of the guys who was younger than I, he was a trained welder,
okay.
and he realized that hey, he can make about $1,000 to $2,000 a week selling insurance, and I said to him, "Hey, is this better than welding?" He's like, "Yeah, it's better than working. Like it's better."
Well, that's great. So I love that you've owned it. You've taken it yourself, which is fantastic. um, I want to just talk very briefly before we go. We're obviously in the liability management business, in the mortgage business, and we help you sort of manage the liabilities. Within your business, how do you view debt liabilities and how you incorporate that into your conversations, if at all?
I mean, for me, it's for especially for insurance, right? Because, like I said, I'm not doing like investment plans in the background. I'm not like looking at like, I'm not selling options and buying calls and puts and stuff like that. So, um, it's just from a like a very generic standpoint. Like, if someone has X amount of debt because they've got commercial real estate, and they want to basically make sure that that's going to be whole if they pass away, or if they're actually getting the life insurance to be able to get the loan with the bank. That happens a lot
Hmm.
too. But what I'm seeing more and more of is like, hey, if you started buying like one or two little properties 30, 35 years ago, and you're now 65 years old,
Yeah.
you probably are sitting on like millions and millions and millions of dollars of real estate. Your family is on paper wealthy, much more wealthy than you would have ever thought it would have been 30 years ago. And I think that those people are great candidates for looking at life insurance,
Yeah.
because it's going to create liquidity. We all had clients that passed away in '09, and their offspring is like looking at you like, I thought there was going to be more, right? Like, because the house was worth 30%, 40% more 2 years ago, and the investments were worth 30% more a year ago. So kind of like leveraging that and creating liquidity through
Yeah.
life insurance really ensures that your heirs aren't going to have to sell a property to pay for things. It really does a lot of things. So I guess as far as that goes, that's the way that I would put it. It's a little bit more simple, probably, but
Yeah, no, I think that's great. And on our side, just when the idea of managing liabilities, that you're just trying to reduce the cost of interest over time, so that cash can be reallocated into doing the life insurance and doing investments and doing whatever it is that's important to you, kind of over time. And how do we sort of manage? You're primarily in protection area. We're primarily in this debt area. You have traditional financial planners who sort of manage assets and AUM, and it all works
right,
together at the end of the day, right? All of it has to come
right,
together. You
right.
need all these hats. Well, cool. So we're going to wrap up. I want to give you the opportunity to sort of maybe pass on some last words of advice to the audience and things that maybe you think are important, or a funny story, whatever you want to share. It's up to you. It's Jeremy's final
Gosh,
moment.
I have so much to say. No,
I'm
I
sure you
mean,
do.
I think that yeah, if you're in like the first like 5 years of your business, if you've made it that far, you're already successful. Keep going. I think to those people that are 10 plus, they kind of have figured it out a bit more. My favorite story to tell about the beginning of my career is my first trainer. Train. Let me get in frame. My first
Trainer.
trainer, he said to me, "Hey, you should buy a life insurance policy from me, so you know what it's like to be a consumer." And I was like, "What?
Whoa,
What?
what just happened?
Do you think I just fell off the turnip truck? Like, no, like What are you talking about?" So that's that's kind of the thing, like, right? This industry is, or financial services in general. But so if you can make it past those guys and build a career, then yeah, I mean, I think you're good. And I also like, I like saying this too. I'm not in competition with other advisors, right?
Exactly.
I want to like work with other advisors, right? Because I make jokes and I'm serious when I need to be, but like I'm not that type of advisor. But if someone like really doesn't like my style, I want to be able to say to them like, "Well, look, this guy went to Wharton and like all he ever does is has his nose in a book. Like this is probably the guy that you want to work with."
Yeah.
So yeah.
No, that's great. Great advice.
Don't be afraid. Don't be afraid to work with your so-called competition.
No, that's yeah, I agree with that. I mean, I think we're in the industry. There's a lot of people that need our help, and I think a rising tide lifts all ships. And if we're all getting better, then we're all getting better. It's all good.
Correct.
Great. Well, thank you, Jeremy. I appreciate it. We'll have all your contact information in the show notes for people that might want to reach out to you. And
cool.
Thanks very much. Have a great day.
Thank you.
See you, and thanks for your time again. All right.